In one day, October 29, 1929, panicked traders dumped 16 million shares and erased a decade of riches. The 1920s roared, and Wall Street roared loudest of all. Factories hummed, cars rolled off lines, and radios filled American living rooms. Stocks felt like a sure thing, and everyone wanted in. From August 1921 to September 1929, the Dow Jones climbed roughly sixfold. Ordinary people, teachers and cab drivers started trading shares, many on margin with as little as 10% down. Brokers lent them the rest, betting prices would only rise. Radio Corporation of America became the era's hottest stock, soaring as syndicates like Michael Meehan's secretly traded to pump the price. $100 of radio bought on margin in early 1928 could fetch $500 by 1929. On September 3, 1929, the Dow peaked at 381.117. Economist Irving Fisher declared stocks at a permanently high plateau just weeks before everything fell apart. Prices wobbled through October, and nervous selling crept in. On Thursday, October 24th, the market lost 11% at the open, and a record 12.9 million shares changed hands in pure panic. Crowds of 10,000 massed outside, and police lined the curb. At 1 o'clock, Wall Street's biggest bankers met at the House of Morgan, 23 Wall Street, to stop the bleeding. They sent exchange official Richard Whitney to buy U.S. steel at $205, well above the market. The bold show of confidence steadied prices for a day, but the calm was an illusion. On Monday, October 28th, the Dow plunged nearly 13%, and this time no bankers rode in to rescue it. Then came Black Tuesday, October 29, 1929. Roughly 16.4 million shares traded as investors fled at any price. So much sold that the ticker ran hours behind, leaving traders blind to real prices. The Dow dropped almost 12%, and stockholders lost about $14 billion in that single day. Across those 2 days alone, the market shed about 23%, and margin calls wiped out fortunes built on borrowed money. In 3 months, the market's value fell from $64 billion to barely $30. Variety captured it with the headline, "Wall Saint lays an egg." By July 1932, the Dow had fallen 89% to just 41. Around 9,000 of America's banks failed, and depositors lost more than $1 billion before insurance existed. By 1933, the nation's output had collapsed from $104 billion to just 55. By 1933, 1 in 4 workers had no job at all. Congress answered with the Glass-Steagall Act and the new SEC. Whitney, the day's hero, was later caught embezzling and sent to Sing Sing. The Dow would not reclaim its 1929 peak until November 1954. Speculation always promises a permanently high plateau, and the fall always comes. Follow boom and bust for the next one.